I'm teacher Ines Shahata. Today we will start our first accounting session. Let's make a small introduction for accounting. First, some students may think that accounting is like math, but actually it's not. We were gonna to deal with the numerical numbers, but it's not like math. All what I'm gonna to do is I will know how to record these numbers. How or what does it mean? First, let's know why accounting is needed, why I will need accounting. The owner of the business may need accounting for many reasons. Now I put specific amount of money in the business. So for me as an owner, I want to know whether I made profit or not. So how I will know this? I will know this by using accounting. I want to know, could I able to pay my commitment in the future on time or not? How I will know this? I will know this will have in this specific time. And I want to know, did I invested? For example, I have $10,000 and I invested in the 10,100 per year. Of course, it's not a good investment. So I didn't in a good way. Those are why I can. So here definition of accounting says that accounting is a process selecting, classifying, summarizing of financial information in a way that provide the owner with useful information. So I'm going to classify the information, financial information, which is anything related to money, all the information that deals with money. So I'm going to classify them, summarize them, and put them in a specific way that will be useful for the owner of the business. I will do this. I will do this by making something keeping. Systematic way. So I'm going to record this way. All accountants all over the world has to follow the accounting equation. I will give you an example. $50,000 in the business, and at the same time, I will buy or to make my business. The money in the business, so what's capital? By the owner in the business. Type, I want to buy by this $50,000 some resources, as I said. This resource is called assets. So assets, everything the business will own, everything the business will have. Okay, but this assets I need resources by $70,000. So I don't have enough money. I don't have sufficient. In this case, I'm gonna to borrow the rest, which is 20, from a bank. So I'm gonna to make something called liabilities. So liabilities, any money that you borrow or you take from any person outside your business, and you have to repay this money in the future. So the accounting equation stated that assets has to equal to capital plus liabilities. It will never will not be equal. It has to be equal always. So let's see the definition of resources. What's assets? What's assets? Assets is resources with monetary value. Monetary value means money value that are owned by the business. The business will own these resources or amount that are owed to the business. What does it mean, amount that are owed to the business? This means that someone will pay this money to me. He owes me. So he gonna to pay this money to me. Like what? Like land, building, equipment, trade receivable, and cash. What's trade receivable? Trade receivable when you're gonna to sell something to your customer and he don't have enough money right now. So you're gonna to sell this product on credit. On credit means that he will pay for you the money later. But for now, I have to have an evidence that this person gonna to pay to me this money later. This evidence or this document or this thing, it's called trade receivable. So trade receivable, it's like a promise of paying the money later, or for me, a promise that I will receive the money later from the customer. Now, let's see what's liabilities. Liabilities amount owed by a business to other business or individual. Now, I'm a business, I owe another business. I owe another business. This means that I have to pay to the others. Okay? And I have something called trade payable and bank loan. We know what's bank loan. I go to a bank and I ask him to give me a loan. What's trade payable? Trade payable is the opposite of trade receivable. Trade payable when I buy or when I purchase something on credit, which means I buy my supplies now, but I don't have money. So I promise the supplier, the one who gives me my raw material, that I will pay for him later. So trade payable, so the business will pay. Trade receivable, so the business will receive. So receivable, so it's assets, S with C. Payable, which is liability, P with B, okay? And then we said, now let's differentiate between the difference between trade payable and trade receivable. So trade receivable are amount owed to the business by customer. So who will pay to whom? So the customer will pay to the business. Trade payable are amount owed by the business to supplier. So who will pay? The business will pay to the supplier. Okay. And we said that the third thing here in accounting equation, we said that we have still capital. What's capital? Capital, the investment made by the owner of the business. Okay, this is the investment that the owner put in the business. Now let's take a small, very easy example. Now he said that John is the owner of a general store. The business has assets with a total value of $75,000. John provided $60,000 from his private resources, which means capital, to buy these assets. So now if I asked you what's liabilities, assets 75, capital 60. So my liabilities will be $15,000 according to the accounting equation. Okay, I will give you another example. Now, if you know that the business has assets of $40,000, liabilities of $5,000. So what's capital? So I'm gonna do subtract. 40 minus 5 gives me $35,000 according to the accounting equation. Okay, now let's take some examples of how the change in assets, capital, liabilities will affect the accounting equation. So first, he said here in January 1, Lena set up a business to trade under the name of Dress Shop. Okay, I don't care about all this information. She opened a business bank account and paid $20,000 as capital. So now she put capital by how much? This is my accounting equation. Assets equal capital plus liability. She put capital by what? By $20,000. She put this money where? A business bank account. He said that she opened a business bank account. She put in the bank assets by $20,000. So here I have $20,000 under assets and $20,000 under capital. Do I have any liabilities? No, so it's null. In January 2, the business purchased premises, $15,000 and paid by check. So now I talk from the bank, paid by check. This means from bank. If you find the word check, automatic it will be bank. So I talk from the bank how much? $15,000. So now the bank decreases by $15,000. And at the same time, I have premises. Premises means building. So building is what? Building is assets. So at the same time, I have increase in my assets, which is premises, by $15,000. So in January 2, I have now premises by $15,000 and bank by 5. It was 20 and I took 15. So the remaining value is 5. Now let's check the equality of the accounting equation. Now what's the total of your assets? 15 plus 5, 20. And the total of the other side, capital 20 and liabilities 0. In January 3, the business purchased goods $13,000 on credit. What's goods? Goods means inventory. I have an assets now called inventory. Inventory is the stock or the goods that I purchased in order to sell it again. But he said now, so I have inventory by $3,000 as an asset. But he said on credit. We said on credit means that he will pay or receive later. Now, I will pay or I will receive. When I purchase, so I have to pay. So I will pay later. So it will be trade payable. So premises 15 as it is, I didn't make any change in premises. Bank is 5, I didn't take anything from the bank, but I have now inventory by $3,000. As I mentioned here, I purchased inventory by $3,000. And what I have else? I took this money as a trade payable. So I have now liabilities by $3,000 and the capital remains 20 as it is. So now if I asked you, did the accounting equation is balanced? Yes. How? Premises 15, inventory 3, bank 5. So the total that I have right now is 23. 23, it's suppose that I have on the other side 23. What are in the other side? I have capital by 20 and I took or I made trade payable by 3, so it's 23. 4, the business sold goods at cost price of $1,000 on credit. So out of the goods that I bought before, which is $3,000, I sold one on credit. I sold on credit. So did I receive money? No, I will receive it later. So I have something called trade receivable. So now my inventory was by 3. I sell 1. This means that how much I have right now, what's the remaining amount? $2,000. And at the same time, what I had in front of this $1,000, I have trade receivable by $1,000. Both of them are assets. Inventory is assets and trade receivable is assets. So premises 15 as it is. The thing that will not change, I will put it as it is. Inventory, it was 3, now it will be 2. Bank, it was 5 and it remains 5 because nothing changed. If you add all of these, it will be 23 again, because this is increased by 1 and it decreased by 1 and this is increased by 1, so the total will be the same. On the other side, capital will not change, liabilities will not change. So this is how any transaction, this called transaction, any transaction which is financial event or financial activity happened, how it will affect the accounting equation. Okay, now I want to record this financial information in my record. So I'm going to make something called statement of financial position. Statement of financial position, it's a format, a systematic format that I will put all my assets, capital, and liabilities on it. And it should be at a specific or a particular date. And this date is supposed to be at the end of the year. Okay? So what's statement of financial position? Statement that shows an organization's assets, liabilities, and capital at a particular date. How it will look like? Let's see this illustration. Now he said that the following information is available. He said that shop premises 240. What's shop premises? Assets, capital, or liabilities? It's assets. Fixture and fitting. What's fixture and fitting? It's assets. Delivery vehicle, assets. inventory, assets, trade receivable, assets, cash at bank, assets, cash in hand, assets. So these, all of this is my resources, which is my assets. طيب, what else? I have bank loan. Bank loan is what? Liabilities. Trade payable. Trade payable is what? Liabilities. So now I have my assets and I have my liabilities. Can I get my capital? Yes. First, I'm going to add all the assets together, all these figures together of the assets. It will be $328,000. And actually, in your exam, it will not be ordered like this. No, it will be mixed assets, one assets, one liabilities, like this. And you're going to see in the question that we're going to solve. Then I'm going to add all liabilities, and the liabilities 40 plus 4, so it will be 40 plus 8, sorry, so it will be $48,000. Now I want to calculate capital. How I calculate capital? Assets minus liability. 328,000 minus 48,000, so it gives me 280. Till now, I didn't make the account, the statement of financial position. I just got the missing number, which is the capital. How I'm going to make the statement of financial position? Very easy. How? So first, I'm going to write all assets. First, I will write the name of the company, Jones General Store, and statement of financial position at the date that he gave it to you. And actually, this heading, it will be right in your exam. I have to start by writing assets. All the assets should be written. So I will copy all the assets from here that I got here with its figure. You have to notice a very important thing, that it's 2 columns. 1 column for the name of the account, this is called account, and the other column for the dollar values. So all the dollar values should be here in this column, and all the name of the account should be here. So I will write all the accounts here with its figures. Then I'm gonna to add the total. When you're gonna to add, you have to put a line. This line means that I'm gonna to add all the above information. After adding this, do I add anything to assets? We said accounting equation said assets equal. So nothing will be added to assets. So you have to put another line under it. This means that you will not add anything else. Then you will put capital 280, the figure that I got up here, that I already calculated, 280. Then I have to write the liabilities, title called liabilities, and under liabilities I will write the bank loan with 40 and trade payable with 40. Now you have to notice a very important thing, that I will add those 3 things, which is capital plus assets, capital plus liabilities, which is bank loan and trade payable, okay? After adding this, you will find that the total here is what? 328, which is the same total like capital and liabilities, okay? Capital and liabilities is the same total like the total of assets, okay? So both total has to be equal. Okay, now I have another thing in statement of financial position. The statement of financial position that I have made, it's simple statement of financial position. Now I'm gonna to make something called classified statement of financial position. In classified statement of financial position, I'm gonna to classify assets and liabilities. I will classify the assets in 2 things, current assets and non-current assets. Current assets, which means assets that will be turned into cash in a near future or in less than 1 year. So it's the assets that will stay with me for less than 1 year till it will be converted into cash. Non-current assets, it's assets that will help the benefit or will help the business or will benefit the business for more than 1 year. Like what? Here in current assets, trade receivable. Trade receivable, it's the money that I supposed to receive in the future. This money, I have to receive it for short term, which means less than 1 year. Inventory, which is the product that I will sell, and it's supposed to be sold in less than 1 year. And the bank, it's already money in my bank, and I have cash, which is the cash that I have in my hand. So all of these account for less than 1 year. While the other, like premises building, how many years are you gonna to get benefit from building? Many. Equipment, many years. Vehicle, a lot of years. Furniture. So the other here, it's non-current assets. In current assets, actually, I have only those 4 accounts. Only those 4 accounts. And the rest will be in non-current assets. Now I'm gonna to classify liabilities as I classified assets exactly. So I have current liabilities and non-current liabilities. Current liabilities, which means the liabilities that will be paid back in less than 1 year. Non-current liabilities, which means the liabilities that will be paid back for more than 1 year. Okay, let's see what's the current. Like what? Like trade payable. I have to pay the money to the supplier in less than 1 year, as we made in trade receivable, and we said trade receivable will be paid back. I will get this money in less than 1 year. Also, trade payable will be for less than 1 year. And I have something called bank overdraft. What's bank overdraft? Bank overdraft, if you, for example, have $20,000 in your bank, and you need to buy a machine by 10. Yes, you have 10, and you need to buy a machine by 15. This means that you have shortage of cash by 5. So you're going to ask the bank to give you the 15, and the difference, which is the 5 that you don't have, you will pay it for him later, but in a short term. Okay? So the difference between bank overdraft and bank loan, that the bank loan is for longer than 1 year. And it's not a must to be your bank. Yani, I may take a loan from a bank which is I don't have any money in it. Okay? Now, in making a classified statement of financial position, I have to order all assets, capital, liabilities in a specific way. What's this way? I will order all this account from the assets that is longest lasting, which is the assets that I will keep for longer time, till the assets that I will keep for shortest time. Which means I will start by what? Non-current assets or current assets? No, I have to start by non-current assets, then current assets. Then I will write capital. Capital, it's only one thing. Then I will write non-current liabilities and current liabilities. So this order, it's called order of permanence. So I will start by the longest or the most permanent assets or the most permanent account to the least permanent account. So what's order of permanence? The sequence used to list items on statement of financial position. It begins with items that are likely to be longest lasting and ends with items that are likely to be shortest lasting. How I will do this? Let's see here. Statement of financial position, and I'll write the title and the date and all the stuff that we said. I will start by non-current assets. But in this time, I have 3 columns. First column for the name of the account, and another $2 columns. For what, those $2 column? The first column, you will write the details of each thing, which means non-current assets, I have shop premises, the value of it. Fixture and fitting, the value of it. Delivery vehicle, the value of it. Then, خلاص, I finished non-current assets. I don't have any non-current assets more than this. So I'm going to put a line to add, and I will write the total here. This is the total of what? The total of non-current assets, okay? So this column only for totals. We said after non-current assets, what we're going to write? I will write current assets. So what I will write in current assets? I will write inventory, 18. All these, the example before, but I just classify them, okay? Trade receivable, cash at bank, cash in hand. It should be with the same order. Current assets, especially with the same order. We will not change anything in it. Non-current assets, I have to start by premises or shop premises. Then fixture and fitting, delivery vehicle, if I switch it between them, it's okay because it may differ from business to another, which one will be kept for longer time, okay? But shop premises, it has to be the first one. So I'm gonna to add all the current assets together. I will put line because I'm gonna to add, then I will write the total of current assets. What I have to do now, I have to get the total of all assets. So I will put a line, add those two figures together. So it gives me the total of all assets. Do I gonna, I have to make any other calculation in this assets? No, so I'm gonna to put another line because now this total is finished. Now I will write capital 280. Why I wrote 280 in the last column? Why it's not in the second column? Because it's the total. I don't have kinds of capital. It's only one figure, so I will put it at the end because it's the net value of capital. Then non-current liabilities, and I have only one value, which is bank loan, so I'll write it at the end too. Current liabilities, here I have trade payable only, but in other businesses, I may have more than one. So if I have more than one, so I will write them here in the second column, then the total or the net value at the end. But here I have only one value, so I'm going to write it at the end directly. So now I'm going to add capital and liabilities together. It gives me $328,000, which is the same like my assets, okay? If they are not equal, so you have made something wrong. Now, let's solve some exam style question or practice question, and we will participate together a question or some practice question on it in order to check your understanding. And you have to participate, huh? All of you, you have to participate with me. Now, vehicle. Let's take it by order. Ahmed. Vehicle, it's kind of what?
A vehicle is an asset.
Asset. Shop fitting. Kenzie.
Assets.
Assets. Cash at bank. Malak.
Capital.
No. Did I mention owner's money? Owner's investment? I didn't. So cash at bank, this means that this is the cash that the business has. So it's what? Assets. Okay? So it's assets. Now, bank loan. Okay. Bank loan. So, yalla Ahmed again.
Bank loan liability.
Owner's investment, Kenzie?
Capital.
Yes. Then inventory. Malak?
Asset.
Assets. Trade receivable, Ahmed?
Trade receivables, assets.
Bank overdraft, Kenzie? I explained كده briefly كده. Maybe يعني I said bank overdraft when you have your money into the bank and you need more than what you have. You have 50,000 and you need 70. So the business will give you, the business will give, the bank will give you the extra 20. So this 20, you will repay back to the bank again. So it will be, you're gonna to repay it back. Yes, liabilities, because you will repay it back. Trade payable, liabilities, machinery, assets, okay? Question 2, we will not repeat it. It's the same idea. Now here, he gives you a table and he wants you to complete the missing figure. So here he gives you assets, liabilities, and capital. So if assets is 80, liabilities is 20, so capital is what, Malak? What we're gonna to do now?
Subtract 20,000 from
Yes.
80,000 to get the capital.
Yes, so it will be
So
60.
60,000.
Yes. Ahmed, capital again in business B?
31,000.
31, we will subtract. Malak, business C, I want liability. Add or subtract?
Subtract.
Subtract. Kenzie, again, yes, Kenzie. Now I want liabilities. Add or subtract?
Subtract.
Subtract. Ahmed, business E, I want assets.
So you'll add the liabilities and the capital.
Yes. And Kenzie, I want assets.
We will add the liability.
We will add. Now we will complete another question. Here in this question, he said that he wants you to make the effect of each transaction and we're gonna to make this effect in this table, okay? And we set transaction, all the financial events that happened. Now in A, bought motor vehicle and paid by check. What happened? What's the effect here? The effect will be in assets. So I have motor vehicle, and this motor vehicle will increase, and paid by check. So by check means bank. So what will happen to my bank? My bank will decrease. Okay. Bought goods on credit from credit supplier. We said bought goods on credit, so I have an asset called what? Called inventory. So here I have inventory under assets, and it will increase. On credit, this means what? I paid what? I didn't pay right now, so I'm gonna to pay later. So I have here under liabilities something called trade payable, and it increases too. Receive the check from a credit customer. I received the check from credit customer. When I receive check, this means what will happen to my bank? I said if I find the word check, this means that it's bank. What will happen to my bank? My bank will increase. From credit customer. So what the credit customer owes me? He owes me what? He owes me trade receivable. So I received from what? I received from trade receivable. So trade receivable will decrease. So under assets too, the trade receivable will decrease. Sold goods on credit. I sold some inventory. So my inventory, what will happen to inventory? Inventory will decrease. So here inventory will decrease. I sold on credit. This means that the customer pays to me or not? No, the customer didn't pay. So what the customer owes me right now? He owes me something called trade receivable. So under assets too, trade receivable will increase. Paid off a loan in cash, which means I repaid back the loan from my cash. So of course my cash will decrease. So cash here under assets, and it will decrease. What about the loan? The loan also will decrease because I repaid this amount back. So under liabilities, I have loan, and it will decrease. Okay? Now, here, let's prepare, here in this question, he wants you to prepare statement of financial position. So before preparing statement of financial position, what I have to do? I have to classify each one, or know what each account belongs to. Is it assets, capital, and liabilities? So equipment is what? Equipment is assets. Cash in hand is what? Cash in hand is assets. Premises is what? Assets. Bank loan, liabilities. Inventory, assets. Delivery vehicle, assets. Trade receivable, assets. Bank overdraft, liabilities, and trade payable, liabilities. So I have three liabilities: bank loan, bank overdraft, trade payable, and the rest is assets. So first I have to calculate the value of assets. So I'm going to add all the assets, and you will find that it will be by $456,000. Then I'm going to add all liabilities, which is 22 and 8 and 60. So 60, and this is 30, so it will be 90. So total liabilities will be 90. And the capital, how I can get the capital? We said, according to accounting equation, assets equal capital minus plus liabilities. So now I want capital, so capital equal assets minus liabilities, so it will be 366. How I will make the statement of financial position? Very easy, it's simple. So I'm going to start by writing assets. This is my title, and I'm going to write all the accounts of assets. And in front of each one, I'm going to write the dollar value. And as I mentioned, all the dollar value will be under the dollar column. I'll write all the values of assets, and I will get the total. Then I'm going to write the capital, which I got here, 366, and I will write here under the dollar column. Then liabilities, I will write the bank loan, trade payable, and bank overdraft, and the values of them. Then, as I said, the total here of assets should equal to the total of capital plus liabilities. Okay? Now, for the same question, he wants me to make the classified statement of the financial position. So let's go back to the same question. Here, equipment. We said it's assets. Now, what kind of assets? Current or non-current? Equipment is non-current. Cash in hand, current. Premises, non-current. All of this is assets. Bank loan, non-current liabilities. We have to memorize everything. Inventory, current assets. Delivery vehicle, non-current assets. Trade receivable, current assets. Bank overdraft, current liabilities. Trade payable, current liabilities. Let's memorize the current. In current assets, I have only 4 items. Only. Inventory, trade receivable, cash at bank, and cash in hand. This is by order. Inventory, trade receivable, cash at bank or bank only, and cash in hand or cash only. Okay? In the current liabilities, by order, trade payable and bank overdraft only. And the rest will be non-current. So let's see how the classified statement of financial position will look like. We said I will start by non-current assets. I'll write the current assets. Premises, we said that the premises is the first thing. Equipment or delivery vehicle, which one I have or will last with me for a longer time? Equipment. Then delivery vehicle. Then I'm gonna make a line and add these and write the total in the last column. Then I'm gonna write current assets. As I said, by order, inventory, trade receivable, cash in hand. If I have cash at bank, so it will be before cash in hand, but I don't have. And I will write the value here in this column. Then I'm going to make a line because I will add and I will write the total here. Now it's time to add all assets together, non-current assets and current assets. And the total is 456. Now capital, we said that we have only one kind of capital, so it will be written in the last column because it's only the net value, the total value. Non-current liabilities, I have only one bank loan, so it will be at the end. Current liabilities, I have 2 items or 2 accounts. Trade payable, so I will write here in the first column or first dollar column, trade payable and bank overdraft. Then I'm going to make a line because I'm going to add them, and I will write the total at in the last column. Now, what I will do, I will add capital, non-current liabilities, and current liabilities. It gives me 456, and the total of the capital and liabilities should equal to the total of the assets. Now, I hope you enjoyed this question and understand it very well. Now, let's see another question. Here in this other question, he gives you statement of financial position, but it's an old one. So in the old edition, he put assets here, capital and liabilities here, but actually they're supposed to be under each other, okay? So imagine that it's vertical way. Here, he stated that he gives you some transactions, and here he wants you to make statement of financial position on 1 November, which means after all the transaction above. So here he said a check for 3,000 was paid to a credit supplier. So I paid to a credit supplier check. This means what will happen? My bank will decrease. So this 10,100 will be decreased by 3,000. I paid to whom? To credit supplier, which is trade payable. So my trade payable will decrease because I repaid to him. So this 8,000 will be 5,000. So I will cut this and write here 5,000. And this bank, it will be 7,100. A loan for $8,000, which was paid into the bank, was received from lender Lender Limited. So I received the loan from lender, which is Lender Limited. Okay, so I received from him money. Where I will put this money, he said, was paid into the bank. And if he didn't mention automatic any bank loan, I took this money and I will put it in my bank. So this means that my bank, we said it was 7,100. Now it increased by this 800. So it will be 15,100. So I will cash 7,100 and I'll write now 15,100. And I have now here in liabilities something called bank loan, and it will be by 8,000. A check for 7,000 was paid for an additional machine. I purchased additional machine. So machine increased. It was 19. So now it increased. So it will be 19 plus 7. So it will be what? It will be 26. And my bank decreased. It was 15,100. It decreased by 7. So it will be what? Instead of 15, it will be 8,100. And I'm gonna to make statement of financial position like the previous one. Instead of this, I will make it vertically, all of them under each other, and just change the numbers. I added this motor vehicle. If there is any change here, any change, all the numbers that I mentioned, I'm gonna to put it. Anything I added like bank loan, for example, so I'm gonna to add this value. Okay, inshallah, in next session we're gonna to solve many questions from this, how to change or how to make the effect of the transaction, and inshallah you will get trained on it. And thank you for your watching. See you in next session, inshallah. Goodbye.